everybody, to an absolutely exciting AMA here at DeFi Raiders. My name is Relentless. I'm here with my partner Degenic, and we are blessed to have the opportunity to speak with Matt from the Synthetix team. To say that we've been looking forward to this is just a massive understatement. So first and foremost, we want to say thank you so much for giving this opportunity to host you here at DeFi Raiders. There are so many people who are excited about what you've done so far, and we can't wait to hear what's coming next. So with that, welcome and thanks for joining us today, Matt.
Yeah, no, definitely. Thank you guys for having me. Always love to chat about synthetics, chat about myself, things along those lines. So, always very receptive to hopping on these calls and, chatting with you folks.
Yeah, I like to talk about myself too, so that in common.
Yeah, exactly.
All right, so would you like to go ahead and introduce yourself? Tell us a little bit about yourself and your role in the Synthetix team.
Yeah, I'll give a brief intro about myself. As said before, I'm Matt. Handle communications, marketing, some partnership stuff at Synthetix as well. So any sort of written material that you see come out of the Synthetix side, whether it's Twitter, blog posts, Discord announcements, these AMAs like this, or, maybe on Twitter Space or so on and so forth, is mostly going to come from myself, coordinating with some other team members on it as well. So that's a little bit of the intro about what I do at Synthetix. How I got hired at Synthetix is always a little bit of an interesting story. The way that actually happened was, I think, actually a year ago to today, or rather just a year ago to this month. Started a Twitter account, started tweeting about Synthetix. Had been a long time, DeFi user and community member at Synthetix, but hadn't really taken it too seriously. But what I'd actually done was, I started tweeting about Synthetix, found a little bit of a gap in communications, and would just kind of tweet about, how Synthetix works, how synths work, interesting with people to utilize, whether it was futures, options, so on and so forth. And then after a little bit, some of the folks at Synthetix took notice and, asked me if I wanted to come on and, work in a full-time capacity. So yeah, it's like the most DeFi way of working in DeFi, right? Finding a being DM'd on Twitter to work at a space full time. So yeah, that's the little short and sweet, about me, and yeah, happy to be here with you guys.
Hey, whatever gets you on the team.
Yeah, it's always great to be surrounded by a great set of core contributors that work alongside us, and then especially, a lot of people will. I don't know if they always take this into account, but it's not just the core contributors by any means. Synthetix is surrounded by such a great group of community members that really help the world go round. Is what I like to say. Synthetix has a volunteer marketing group. That's actually how I got my start at Synthetix. Um, and it pretty much is like 70 members or so, and they contribute in various ways. So, yeah, definitely.
Yeah, that's awesome. All right, so we'll launch into a few, and then Degenic's going to ask a few, and then I'll ask a few more. So that'll be kind of the rotation. All right, so Synthetix has been a DeFi for a long time. Would you mind going ahead and giving us a quick history of Synthetix's evolution from your perspective?
Yeah, definitely. So number one, it's probably like important to explore like what Synthetix actually is. Um, we could probably talk about the history of Synthetix a little bit after that. But so like at its core, Synthetix is a decentralized synthetic asset issuance protocol, right? It's built on Ethereum and optimistic Ethereum. And how these, assets are brought on chain, right? Like let's say you want to trade synthetic Bitcoin, right? These synthetic assets are collateralized by SNX, the, the Synthetix token, which, when locked into the staking contract, enables the issuance of more synths, right? And just to explore what the hell all that means, this like pooled collateral model where there's SNX that's staked, and then you receive a certain amount of SUSD as your debt to this large debt pool, then will allow users to perform exchanges between synths directly, avoiding the need for counterparties, order books, and with that you solve this liquidity and slippage issues which are experienced by most decentralized exchanges, right? And as of right now, Synthetix, currently supports, fiat currencies, cryptocurrencies, commodities, and the like, right? And the way that I like to explain Synthetix to people is, the Synthetix of 2 or 3 years ago was a front end for traders, and today it's really not, right? Synthetix today is a back end protocol for others. I like to think of it as a money Lego for protocols to build on top of, where Synthetix is this base layer, and other protocols such as Quenta, Lyra, Polynomial, and then household names like 1inch and Curve, and so on, tap into Synthetix and use the liquidity for different purposes. So just to quickly chat through those, there's someone like Quenta who is tapped into Synthetix for spot and futures trading, and then there's someone like Lyra for options trading and the like. And Polynomial, which is actually who I was just talking to, 20 minutes ago, half an hour ago at this point. They build on top of Lyra for options vaults, which would be, if you automatically wanted to sell covered calls with your synthetic ETH. And then there's people like 1inch and Curve, right? Where 1inch and Curve will tie into SNX liquidity for atomic swaps, which pretty much help to provide, like these best fills for users, when they're swapping through very large amounts at Synthetix, right? So let's say you're doing a trade for, a couple $1 million on Curve or, on 1inch in this case. There may not be enough liquidity to support that in decentralized order books, or at least enough liquidity at proper slippage parameters. But at Synthetix, Synthetix doesn't have slippage, right? It follows this model of a flat fee being charged, to go from SUSD to SETH, or SETH to SBTC, and so on and so forth, right? So that was a lot of information. I'll let you guys, let me know if you have any questions about that, or want to jump into another one.
No, I appreciate that. That's actually Nick was going to ask a little bit about the partners. So basically what you're saying is so they have the over collateralized liquidity pool, which helps like a little bit with preventing front running and obviously with slippage. And so those other protocols that are working on top of yours, that's what they go to, right? Your over collateralized liquidity pool.
Yeah, so pretty much the model of what, let's just say someone like Quenta, right? Like if you want to do futures trading, that's as simple as tying in with, Synthetix's, futures contracts, right? Because anyone can really spin up a protocol that interacts with Synthetix. A couple clicks on Etherscan, and you can start trading directly with the contracts, right? You don't need to use any of these direct UIs. I know Lyra for options trading uses synths like synthetic assets. Quenta for futures is obviously using the futures markets. Um, and then 1inch and Curve is also tying into synths, right? So and then stakers play an integral part of this whole system as well, because they're the people that are actually providing SNX as collateralized SNX, which then allows all these traders to complete these trades. And what these stakers then get is they get 100% of the fee revenue, right? So they would receive 100% of the trading fees that are completed during a week, right? They receive that every week on Wednesday. It's like a little holiday over at Synthetix.
Oh, 100%. I didn't realize it was 100% of the fees.
Oh yeah, no, Synthetix is not like some other protocols where maybe they'll carve out, a small portion of it of the fees. The Synthetix Treasury, which is a council, an elected council by the token holders, they don't get their own carved out, allocation. All these allocations are 100% of the fee revenue is going to stakers, and it doesn't matter if you're Kane Warwick, the founder of Synthetix, the Treasury Council, or if you're just a random staker, right? You're all receiving the same pro rata amount based on how much you're staking.
Very nice. Yeah, that's a pretty good incentive to stake. Yeah, for sure.
Yeah, I always like to say though, and it's a very good thing for people to know, is synthetic staking is not like the rest of DeFi, where the rest of DeFi takes staking as like a very straightforward process where put money in this contract and you'll receive rewards, right? Like that's how most people look at staking. Synthetic staking is different, right? Because it it isn't just, stake and that's it. Like you're playing a vital part in how liquidity is provisioned and then, how liquidity is then, put to use by protocols. So synthetic staking is more of an active process where you'll have to hedge the debt that you receive against the overall debt pool, which there are easy to use tools for that. Um, but a year ago, a year and a half ago, there weren't easy to use tools.
Right. So Synthetix requires you to be incredibly active, right? So if you, from my understanding, if you don't claim your rewards every week, right, they get redistributed to the other
Yeah,
stakers.
yeah, no, that's true. So, Synthetix follows a snapshot model of distributing fees and such. So, every Wednesday, I want to say it's around like 1:30-ish p.m. Eastern. That's when, fees are made available, inflationary fees and, regular trading fees. And yeah, if you don't claim by the following Wednesday, all those rewards are distributed to the, all other stakers for the following week, right? A good thing and a bad thing. Obviously, everyone wants to be able to be rewarded, but the integral part of Synthetix is being an active staker and a healthy staker. So if you're not fulfilling that, that large piece of it, then you're not, playing as good of a role, in helping Synthetix provide liquidity. And without that, you really shouldn't be rewarded, right? And that's a hard thing people to wrap their heads around. But there are easy to use tools. So let's just say that you want to hedge your debt. You'd be able to go to a tool like DSNX, which is made by a partner protocol, DHedge, and you take your SUSD. Once you stake, you put most of it in there, and then that hedges for you automatically. So if you ever need to burn to, and burning would pretty much just bring you back to the collateral ratio that Synthetix is targeting, which is 400% right now. You would then use a tool like that, take the money out, put it back in, so on and so forth, to continue to claim. So there are definitely processes to make things easier. And then on the claiming side, it's something that it was actually a passion project for myself. But I we work with partners, Gelato Network. I don't know if you guys have heard of them.
Have
To
not.
release Gelato Network pretty much just allows you to do automated things on chain, and in our case, it helps users automatically claim their rewards if it's available, right? Because if you're above the target C ratio, if you're above 400%, you can claim, right? But you have to be near your computer to claim, near your wallet, right? So this feature allows you to just automatically claim once it sees that it's available for you, without any sort of other added issues for yourself.
Yeah, absolutely. And fascinating stuff. Uh, the futures trading via Quanta, options trading via Lyra, and options vaults on Polynomial. I need to now go check out myself. Um, so yeah, I was going to ask. Tell us a little bit about the move to optimism and and how that has changed and or benefited the protocol.
Yeah, definitely. So, um, I think to answer this, it makes the most sense to talk a little bit about why the move to optimism is so important for Synthetix. So, if you go back to pre-optimism exchanging, right? The issue with being on mainnet for a protocol like for a protocol like Synthetix, right? Synthetix requires price feeds to operate very quickly and at low latency, right? Because you need the price of these assets very, very quickly. And if they're not provided so quickly, people can then take advantage of the system, right? In some way, they'd be able to profit off of trading, front running the oracles before the oracles are able to present the price. So the solution to this problem on mainnet, because obviously layer twos weren't available at the time, was to pretty much it pretty much worked like this. So let's say you were on mainnet. I want to say this is, I mean, it's actually still the case on mainnet right now. So if you're on Ethereum mainnet and you make a trade, if you trade from SUSD to SE, right? You'll have to wait. It's a period, I think, from 7 to 10 minutes. And after that time is over, that's when you'll actually know exactly like what the exchange rate you received, right? because the Chainlink oracles aren't able to update as quickly on Ethereum mainnet because it's cost prohibitive and so on and so forth. That's the solution, right? Now, I'll be the first one to say that is a very poor because who wants to trade if you have to wait 7 minutes to know what you paid, right? Like, yeah, I'd love to swing trade when I have to wait 7 to 10 minutes to know what I actually, what fill I actually got in at. That's very poor user experience. And then you could jump in with a bunch of other UI issues and so on to present that to people. So the move to optimism for Synthetix really allows it and has allowed it to grow to this point where so many other protocols are possible that wouldn't be possible on Ethereum mainnet, right? Synthetix could have never had trading. It could have never had options built on top of it, option vaults, so on and so forth, with feeds that aren't even able to support spot trading, right? But on Optimism, that's not an issue anymore, right? Like these feeds are, the latency is very low, and with that, you can build these novel products that you wouldn't be able to, to put on mainnet. And then as an extension to that, as a Synthetix staker, right? Like the amount of liquidity that you're able to bring into Synthetix staking through an L2 like Optimism, where fees are below 10 cents most of the time, is leaps and bounds better than Ethereum mainnet, because you had people on Ethereum mainnet who they'd stake and they'd go to claim their rewards and they're like, yeah, I'm gonna be charged $160 in gas fees to claim $100 in rewards. Well, that's not worth it, right? And then people care less and less about being a healthy staker because they're not being rewarded for it. So this move to optimism, was really so important for Synthetix, and it opens up so many other avenues for Synthetix to grow from there.
Yeah, that's great. All the core use cases for layer 2s and for other layer 1s as well. And you've actually seen liquidity growth there versus what you have on ETH, huh?
Yeah, like that's one thing. And then number two, it's just like the type of traders that can use Synthetix now as well have grown. It's not just gated to people that can eat the gas fees for large trades and just don't really care about the fees that they have to pay on mainnet at points. This was obviously more of a problem in the past. Ethereum mainnet fees haven't been as bad as of recent. But I mean, for the guys that were around for DeFi summer and then the periods following those times, hundreds of dollars in transaction fees could have just happened, and you would have to eat it. And that's a very poor user experience, right? So now you're able to have anyone can go on to Quenta and trade futures at up to 25x leverage at any point. And then, obviously very important to the Synthetix community is this path to decentralization for Optimism as well, right? Because the Synthetix community doesn't want to be on, a layer 2 that has no path to that. So, that's very important for Synthetix. Synthetix has always, been on this forefront of decentralization. So yeah.
Perfect. That was actually going to be my next question. You guys are clearly one of the leaders in decentralized governance, both in terms of structure and in caliber and dedication of community. So what has made Synthetix so successful here, and how close are you to reaching complete decentralization?
Yeah, no, it's a great question. Just to start off, to give some context on like where Synthetix's governance is right now, right? Synthetix follows a model of governance, of decentralized governance, that I personally think is the best. There's definitely open questions as to what's the best one, right? Synthetix follows a representational governance model, right? So if you're voting to put people onto the Spartan Council, which is the council that decides on any parameter change that relates to Synthetix, if you want to raise fees on a certain market, if you want to, introduce a new market, if you want to introduce a whole new side of the protocol, right? The Spartan Council is going to vote on that. And these people are voted in by the token holders, right? And it's a quadratic voting model as well. So pretty much what that means is that smaller stakers and larger stakers, I'm not going to say they obviously don't have the same voice, but a smaller staker isn't just written off completely, right? Due to this quadratic model, you're not going to have larger rich stakers just come in and elect whoever they want to the council, and that's the end of it. right? So, I mean, it's very important to make sure, every single vote counts, and large whales can't just put themselves or friends or, whoever else on the council. And one of the things I like to say about Synthetix governance is that governance is fierce, and that's the great thing about it, right? So if the founder of Synthetix, Kane, wants to, come out and present a very large, brash idea that, goes against the typical, Synthetix ethos, I mean, he'll get shot down. He's been shot down time and time again for things that he's presented. The council will tell him no. There were even times, I was able to meet him a couple months ago, and while we were sitting at a table together, I don't even know where we were. He even said something along the lines of like, "Did you guys vote in this? Like, did the Spartan Council vote in this change?" And he was like, against my vote, and they were like, "Yep." And that's the end of it, right? Like, and Kane respects that model, and as does every other whale at Synthetix, and that's super important. It should never be that whatever the founder's word is what goes. There should always be this like true decentralization that happens, where governance is really empowered to do what they think is best, and what they think the token holders that elected them want as well. There's always a little bit of a story that I tell with a situation that Kane once brought in to talk about how decentralized Synthetix is. Synthetix is SUSD, the stablecoin for Synthetix, and pretty much used, probably the most used stablecoin on Optimism because of all the use cases. Was having issues with scalability, right, at a certain point in time. This is probably 9 months ago now. I think Lyra Finance had just launched, and they were launching massive liquidity mining campaigns, and there was not enough SUSD to support the demand that was out there. And at this point, there had already been other solutions tried. And other solutions would be, in this case, allowing people to, take loans with their ETH and borrow SUSD, or, wrap ETH and, generate, SUSD, right? So there were things that were, wrap ETH and then, get SETH and so on and so forth. Now, these things were all explored, and it still wasn't enough. Everyone wanted SUSD to be in these liquidity mining things because the rewards were that high, right? And what this had actually caused was the community had debated a proposal to introduce DAI as a collateral, pretty much like a collateral option to generating SUSD. And to talk about how fierce this discussion was, Kane pretty much said, "We really need this right now, and we're going to do it." I think it was up to a cap of about 25 million DAI. And Kane said, if this is not removed by the next time, by like the end of the Spartan Council's epoch, because it's a 3-month epoch that they're elected for, he said, if this isn't removed by that time, I will resign my seat, because I know that we're going against the well wishes of the token holders right now. And every other point that DAI has, people have tried to introduce it as a collateral option, Kane and others, now, will not allow that to happen again. That's done, right? And that really shows you how important governance is, right? Sometimes you have to go against, what the token holders may have wanted at the time, but then Kane makes another decision where it's like, okay, let's stand true to it and never touch this again, right? So yeah, that's kind of where this governance thing is at. There's items to explore with, Synthetix v3GM, which plans to move all of governance on chain. We used to hold our elections with pitches and such via Discord. Now if you go to governance.synthetix.io, everything is hosted there on chain, and then hosted via IPFS via Boardroom. So a lot being done on that side of things, and obviously the biggest goal is removing as much power as possible and returning it to the token holders, right? And Synthetix is well on a path to do that.
Yeah, that's super exciting. You guys are clearly way out in front there, and I love governance as fierce as a description.
Nick, if I could I ask a question on the governance portion?
Yeah.
Okay, so with
Matt, with you guys talking about moving to full on-chain governance, does that eventually become something where like the code and everything is able to be like crowdsourced in a way? And if so, like how quickly does that escalate?
Yeah, so just for some context right now on how this works, right? So the Synthetic Spartan Council would be presented with a proposal. It'd be presented to the community in calls that we hold on Thursdays of every week. So that's presented, great. If the Spartan Council approves it, awesome. Now it's handed over to a protocol DAO, and that is pretty much the eligibility is determined by SIP. That I'm not fully 100% sure off the top of my head, but it's Synthetix engineers that have been around for a certain amount of time, and they actually push the code changes that are proposed by the Spartan Council, right? Now, that's great and all, but the a real awesome goal is to not have them have to be a part of this process, right? Is to just have the Spartan Council, take a look at the code that engineers provide or the community provides, and then be able to push it themselves, right? But there's obviously issues with that, right? Like you now have to trust that this council, can't be, taken over in some way, or that the token holders are represented properly, and so on and so forth, right? But yes, that is the goal of Synthetix v3GM, and then as an extension to that, Synthetix v3GM, which I know I didn't actually say what that is. That's v3 governance module. And what that actually plans to do once it's implemented fully at Synthetix, it plans to, have a module that any, DeFi protocol could then use for themselves, and they'd be able to use this module in any sort of customizable way that they'd like to as well. So yeah, information to follow on that. As of right now, there's other items that are taking up more time and resourcing and so on. But yeah, that's the path of governance thus far.
Oh, nice. Yeah. Thanks for clarifying. Yeah. Back to you, Nick.
Thanks. Yeah, that's super exciting. I love the goal. So would you like to talk a little bit more about V3 and what else is included there?
Yeah, no, I'd love to. So, just to explain this like difference between Synthetix v2 and Synthetix v3, Synthetix v2 is where we're at now. It's really named this way as like as a way to separate resourcing and priorities and so on. So people understand that these are two very different systems. And just to say what Synthetix v3 is, Synthetix v3 at its core aims to accomplish what Synthetix wanted to be and aims to be. Transforms the protocol into a permissionless derivatives platform, right? So this vision comes into three big points, right? So number one is permissionless asset creation. Anyone being able to spin up any market they want at any point. So let's just say you wanted to have ApeCoin right when it came out, right? Or Dogecoin right when Dogecoin was blowing up, right? For Synthetix right now, launching a market like that takes resourcing from Chainlink, takes development resourcing, governance votes, and so on. A real big goal of V3 is to have people be able to create whatever asset they want at any point. Number two is this like liquidity as a service, right? So any protocol, whether it's Synthetix ecosystem projects that exist right now, or if it's even perceived competitors of Synthetix, would be able to tie into Synthetix and use the liquidity at any point, right? They can spin up their own markets on Synthetix. So let's just say you're an option vaults provider that isn't polynomial, right? You'd be able to start up your own market and generate liquidity, push liquidity mining rewards, to these markets. And all of that would be handled for you. It'd be a much easier way of spinning this up. It helps to solve this cold start liquidity problem that a lot of protocols face. Because now you have a very easy option to tie into. And then three is this better control of their credit for stakers, right? As of right now, when a staker stakes, they stake to the entire debt pool. So whatever the Spartan Council decides is part of that debt pool, let's just say they're introducing a new asset, they have to potentially hedge against that asset. in the future, with permissionless asset creation and so on, stakers would be able to decide which markets they're providing their SUSD liquidity to, right? Which pretty much means, let's just say someone in here wanted to spin up a new market. That's great. I mean, you can spin it up, and that's fantastic. But now you have to generate the proper liquidity for that. Now, if it's a market that people are comfortable with, you probably just be able to go through the Spartan Council and say, hey, let's support this with a very big pool of funds, right? With like the default pool. But if it's a little bit riskier, then you can spin up this market, right? But now you may have to get liquidity into this, to get people to actually delegate their SUSD to it. There's going to have to be a good amount of fees that are generated for this. And it's permissionless asset creation, but there's then a cap on how much trading people can do for that, which is a much better model than what Synthetix does right now. By pretty much, for any synths, you're pretty much provided like an unlimited amount of asset that you can purchase at any point. And then, going into this Synthetix v3, Synthetix v3 is really this like complete rebuild of the protocol from the ground up, right? I mean, Synthetix is a a protocol that's so many years old at this point. And many DeFi standards and architectural standards, Solidity standards, so on and so forth, were not standards when Synthetix was being built, right? So, allowing Synthetix to build on a much better, framework and foundation, allows tying in with Synthetix, building new features, so on and so forth, a much more, efficient path for Synthetix as well. Probably just two more points to explore. We like to say, why will builders love V3? Builders for any sort of protocol would be able to create a pool to support nearly any financial derivative you want to build. And then, some of the examples of that is, you can go from traditional financial markets to more exotic markets. You'd be able to build something like a no-loss lottery, or even totally separate protocols on top of, Synthetix v3. And then integrating with Synthetix is not going to take weeks, and working with our devs and working with Synthetix's devs and community members and so on, it'll take days. You're tying into a platform that's much more straightforward. And then why will stakers love V3? You've got this simplified staking, where you don't have some of these architectural problems that we have right now. And then this debt pool where you can pick where you actually want to provide your collateral to. Maybe someone wants to be a little bit more conservative as a staker. Maybe they don't want to provide collateral to the whole debt pool. Maybe they just want to provide it to people that are trading SETH and SBTC, right? That's a much easier path to go down for someone, a much more easier pill to swallow when it comes to hedging against changes like that. Very important to note, Synthetix v3 isn't set in stone, constantly evolving based on governance, community input, and so on. I would highly recommend going to the Synthetix SIPs website at sips.synthetix.io and taking a look at all the SIPs that start with 300. So it'd be 300, 301, 302, so on and so forth. And you could read, the current status of those and what governance has done with them thus far. It's definitely a great read. So Synthetix v3 plans to bring Synthetix to the next level, and that's the hope. It's built on years of development and transform this protocol into what it always wanted to be, which is a permissionless derivatives protocol. But at the end of the day, all things are set by governance, so they will have to decide what parts of Synthetix v3 will move forward and what parts they want to change, and so on and so forth.
Wow, that's going to really change some things as the Lego block for other protocols. A quick question: does Chainlink provide price feeds for Synthetix assets on other chains?
As of right now, Synthetix exists just on Optimism and Ethereum mainnet, and Chainlink provides feeds for for the markets that exist on those two chains. Outside of that, I know that one of the engineers at Synthetix, let me grab his info. I know he just put out a tweet today saying that he's going to be at SmartCon, which is Chainlink's conference. I want to say it's next month. and he was going to be chatting a little bit about his vision for Synthetix v3, and then about multi-chain plans from there, right? Because once there's a much better architecture that's set up, deploying on other chains is so much simpler, right? When you're working with code that's 3-4 years old and standards that have changed and so on and so forth, it's a lot more difficult to just quickly deploy onto other chains.
Yeah, cool. That's super exciting. Let's see. So I also saw you guys are currently have a vote up about transitioning away from inflationary rewards to being purely revenue supported. Is that something you're comfortable talking about?
Yeah, I mean, I can discuss it from like my personal, view. It's kind of how this whole governance model works, right? Like me as a Synthetix core contributor has no additional say than any other Synthetix community individual. Yeah, so that proposal, I know Kane put it up. It obviously deals with removing, just kind of getting rid of inflationary rewards over a 10-week period. I think it's a great goal. I think it's something that protocols should always strive for, because you can't just print your way to people liking your protocol forever. It doesn't work, as we've seen with protocols time and time again. Now, like, do I think that it will pass in its current form? I don't really think so. I think it might be a little bit too quickly to wane off of inflationary rewards. Especially like to give you context on how many votes that needs. Out of the entire Spartan Council, everyone has to vote yes on that. That's a meta governance proposal, pretty much meaning it has to pass by unanimous vote. So if one person says no to that proposal, it's done for now, right? And then it would have to be reworked on and represented and so on. Now, just to talk about fees, yeah, I mean, Synthetix fees have been blowing up as of recently. There's been a lot of new users using atomic swaps through 1inch and Curve, which is generating fees on L1, and then there's the people that are using futures and options and so on and so forth on L2. So the fees narrative has definitely blown up as of recently. So yeah, I mean, I think the long-term goal is to always try to get rid of these inflationary rewards, or make them lower and lower as time goes on. And just to give some numbers, I know the last time I checked, the last fee rewards on L2, I think was about 22 to 23%, annualized over the period. So yeah, I mean, I would love to have, as a regular individual, I would love to have Synthetix wane off of inflation. I'd love for the rest of DeFi to do the same. So I feel like as you wane off of inflationary rewards, it really shows you as a much more matured, protocol that can exist without incentivizations that bring people in. But yeah, I mean, I have no idea as to if it will pass in its current form. I think it's going to be up for a presentation this Thursday.
Oh, cool. Thank you. And great answer. I mean, I'm really interested in in the background, the decision making, and ultimately the large scale trend of protocols figuring out how to move away from inflation to support themselves.
Yeah, and that should be a really big goal of all these protocols, right? Because just printing tokens to have users come in and use it and then be mercenaries with liquidity, I mean, it's not sustainable. And I mean, it's not healthy for the protocol and so on and so forth, right? Like it's good for certain amounts of time as you get to that point. But I mean, if your protocol has to survive off of inflation, I mean, it obviously can't survive for the long term.
Right, but also a great roadmap for smaller, newer protocols to follow. That like you can start out inflationary and and build revenue and transition away from it.
Oh yeah, yeah. I mean, that's the model of Synthetix from the beginning. You build and you incentivize off of inflationary rewards at first, and inflationary rewards aren't inherently bad, right? Because the people who are receiving them, it's not like these inflationary rewards were carved out for the core contributors or the treasury or whatever, right? It's whoever's staking is being rewarded. So it's an integral part of the system, and it's an integral part of incentivizing people to stake. But obviously they can't exist forever, or they can't exist at a large amount forever, right? I would feel that you could probably convince the Spartan Council to come down to a number like 5 to 10% APY for staking. But that's totally up to them at the end of the day.
Yeah, that
So,
makes a lot of sense.
so
I've got one more Relentless, if you don't mind, or are you jumping back
okay.
into that one?
Oh no, I just wanted to ask one question about the inflation subject. So, are you guys watching how the transition with Ethereum's merge goes, with them moving to a deflationary model, to see how that could drive you guys forward?
I know it's being watched. I mean, probably it's not really like related in that sense, right? Because as the Ethereum merge goes on, there's a lot more that can be done as more users come into Ethereum and use it, and L2s grow and so on. There's like this burn pressure. There's really not that burn pressure within probably any other protocol besides protocols that burn their fees. So I mean, totally watching. There's things that are happening. There will be communications released as to what Synthetix will be doing during the merge, and very excited to see that unfold. But yeah, I mean, not 100% sure on how exactly protocols could model after that. Maybe there's things to do around burning the fees that you bring in or something of that nature. But obviously gonna be a difficult to model after in a way that people support.
Yeah, it makes total sense. Back to you, Nick.
But yeah, definitely very excited for the merge. Very excited. Didn't think it'd be 2 weeks away, and we'd all just be casually talking about it.
Yeah, it's gonna be crazy time.
Yeah, definitely.
And right, a lot faster than it might have been in the grand scheme of things. So now would you mind telling us a bit about the Synthetix Grants Council and the related upcoming NFT?
Yeah, I mean, I'm not 100% in the know about the NFT that they're launching. I know that they've spoken about it at various points and are, modeling it around, modeling, each individual NFT around different ecosystem projects. I know it's been in the works for, a long time now. And so on and so forth. I'm not exactly sure how they plan to push that out to the users, and what that actually looks like. I do think it will be great to have like Synthetix branded NFTs out into the world though. It's always nice to have people have those, and then it's just a nice cool thing to have in your profile as well. But to talk about the Grants Council, should probably provide you the context for all the councils. So I'll do that. So the first council is, as said before, that'd be the Spartan Council, which decides on these large protocol level decisions, raising fees, supporting new markets, deploying to a new chain, so on and so forth, right? All things that the Spartan Council would decide on. Then there's the Grants Council, and they decide on these incentives for people to build tooling or bots, different centralized front ends, which I know they're funding as of right now, and so on and so forth, right? New UIs, easier to use tools, and so on and so forth, right? They serve a very vital purpose and do a ton of great things. They're voted in council as well. There's the Synthetix Ambassador Council, which actually deals with lobbying for Synthetix in the grand scheme of DeFi governance as a whole. They play a large part in optimism governance, governance for other protocols. They put on twice a week Twitter Spaces with protocols as well to chat with them and to use Synthetix's reach to promote new and exciting protocols on optimism and protocols that aren't on optimism. And then there's the Synthetix Treasury Council, which controls the the large pot of SNX that it's SNX and other assets that it has, and it stakes and receives those rewards and pays core contributors and pays the members of each individual DAO and so on and so forth, right? They're like this, I guess you can refer to them as like a budgetary arm, and they're also voted in by the token holders too. So yeah, that's. Let me know if there's any other questions on that though, because Synthetix has a very deep, very deep governance in how it works.
Yeah, I love it. It's just it's super interesting to me because it is. I mean, it's hard enough to manage a company as 6 or 8 or 10 people, uh, and doing it with with that many stakeholders is just a remarkable thing.
Yeah, and especially I know Synthetix at the core contributor level, there's probably 20 plus. I mean, you can probably count the green names on Discord. And then the DAOs, I mean, there's probably another 20 something people as well in the various DAOs and councils and so on. Yeah, I mean, this whole model, in my opinion, paying these DAO members, the people that are elected to these councils, very important, right? You can't expect that people are just going to take their time, out of their life and contribute to the protocol in a meaningful way without, these like clear incentives um, that's very important, right? And that's a clear reason why Synthetix's governance flourishes the way that it does, and it has incubated many of the top people across the Synthetix ecosystem. There's countless people that have served on councils, been community members, and worked their way into core contributor positions, or started their own protocols, or so on and so forth, right?
Yeah, it sounds like a great way to manage talent pool.
Yeah, definitely. And then there's like other initiatives like the Synthetix 300, right? That this like volunteer marketing group that I know there's probably like with myself included, there's probably like 10 people that have come out of there, maybe even 15 that have come out of there with full-time or part-time roles within Synthetix or other ecosystem projects.
Yeah, that's just fantastic. What a great way, an efficient way to recruit.
Yeah, I mean, there's really no better way to do so, right? Like, at least in the way that I look at it, because you know, let's just say that a protocol is looking for a communications person or a marketing person or so on, right? It's gonna be very difficult to bring someone into the protocol that knows marketing but has no idea what's going on in this like financial world that lives underneath your nose, right? But it's much easier to teach someone who understands DeFi marketing and communications, right? Or, some sort of like project management side of things, or so on and so forth, right? So that's really where this talent incubation comes from, because then you kind of figure out how these other people can fit in to roles that need to be filled in some sort of way.
Yeah, very cool. I hope anybody thinking about building a protocol is taking notes on this stuff. Uh, and with that, I'll turn it back over to Relentless.
Thanks, Nick. So kind of transition to a couple of the bigger picture questions that I want to pick your brain off about. So, and we begin to see large scale institutional investment on the blockchain, right? So, if and when that happens, there's obviously a ton of money that flows through derivatives or markets, or what makes that all possible. Do you think it's possible to bring those markets onto the blockchain as well? And if that transition was to happen, what would that look like, and what role would Synthetix play in making that a reality?
Just to clarify on the question, is this looking into if institutional investment in crypto can happen through Synthetix, or is this just related to institutional investment like in Synthetix and Synthetix ecosystem members?
If it can happen through Synthetix, and what role you guys would play there?
Yeah, no, that's a great question, right? So, I think for institutional investors that are, potentially looking at Synthetix, I think it's really the same sort of buy-in that regular investors can have, right? Because with someone like with something like Synthetix, you have this composability across the entire platform, right? So let's just say you want to obtain a very large position in Ethereum. That's great, but maybe you want to hedge with options, right? So maybe buy large amounts of synthetic Ethereum, and then you hedge against, some of the downside, with options on Lyra. Or maybe, hey, maybe you just want to generate some sort of continuous revenue, right? You may go the opposite way on futures, right? Let's say the market is long, right, and longs are paying shorts. Maybe you'll use Synthetix to farm a little bit of that, and I mean, if you have large amounts of capital, you can deploy it. Yeah, you can deploy that quickly and then earn off that a little bit, right? So there's definitely, many ways for people to get involved, especially, regular people, institutional investors, whoever. I think at the end of the day, it's just as Synthetix continues to build, the community around it will build itself up as well, and then institutional investors, will decide from there what they like and what they don't like, right? And at the end of the day, it's just really important for protocols to build a great usable product, and then from there, I feel like things fall into place. Like there's no surefire way to build places for just institutional money to come. But if you build it, they will come, right? Like everyone will come. Just takes time.
Yeah, I agree. It's all about making it attractive and come so that they want to. Yeah, I agree with that. And so with that, and with SUSD in its current form, is that scalable enough to meet the demands of a market that size?
Yeah. I know I discussed this a little bit earlier as to, like what the history of SUSD scalability. And I really think there's, it's like an interesting situation, right? Because, the Synthetix community wants to be super decentralized. And I mean, as it should. And I personally love the view that Synthetix and SUSD should stay as decentralized as humanly possible, right? Especially in the age of frozen tokens and, other things, right? As of right now, SUSD is backed by SNX, the ETH, Ethereum wrapper, Ethereum loans, so on and so forth, right? And LUSD to an extent, right? LUSD is, only backed by ETH, similar to what, DAI was maybe, what is that, 3 years ago now? God, we're all getting old. And now, DAI and others have shifted away from that. I think when protocols begin to, get so obsessed with this scalability problem, they then sometimes they take the easy solution, right? And the easy solution in my eyes is allowing your stablecoin to be backed by something like USDC, right? Or DAI, right? And while it's great, it doesn't really work for decentralization. Like it's a very poor path to go down, because once you do go down it, it's kind of done, right? Like you then like the peg that you're at, you don't want to deal with the other issues. I mean, you guys can look at MakerDAO and, Rune from over there, the founder, discussing, trying to wane off of USDC and so on and so forth, right? But there are ways to scale SUSD that will work, right? Or at least as of my view and others, people think it'll work and the community thinks it'll work. So there's really expanding the use of Synthetix loans, because you'd be able to take SETH and or rather right now you could take ETH and borrow SETH, right? And that introduces ETH as a collateral option into, generating SUSD, right? Because then you can just take that SETH and convert it to SUSD. So you just generated, some amount of SUSD without SNX. But there's other options, right? There's actually a very interesting option right now. It's by one of by one of the core contributors. He wrote the SIP. I mean, he's a longtime community member as well, and it's pretty much a Delta neutral ETH SUSD issuer. And pretty much what that allows to do is that this contract would accept ETH and mint an equivalent amount of SUSD. And then to offset the short ETH exposure taken on by the debt pool, the proposed contract would then open an equivalent short ETH perpetual position. So that's a very interesting way to also generate SUSD at scale and help with scalability without sacrificing on the core tenets of decentralization that Synthetix takes so seriously, right? So there are like really novel solutions to fix that problem, and I think at the end of the day, the Synthetix community and myself and so on would much rather have to find these solutions of scalability rather than take the easy way and just have scalability through losing out on decentralization.
Oh yeah, okay. I think that's pretty interesting with the ETH there, especially because you're hedging against it losing value, which I think that's smart.
Yeah. Here, I can actually let me drop the proposal if you guys want to read it.
Yeah, absolutely.
1 second, let me just find it. So it's SIP 256. Yeah, I would definitely recommend this as a great read, and I actually just put out a tweet today regarding Synthetix loans and so on, right? And it was funny, right after the tweet went out, I think another like $1.5 million of capital actually, was deployed in a curve pool for SETH, which obviously helps with, scalability around SUSD as well. So shortly after these tweets, people noticed that they'd be able to get loans at a much better rate than, than competing. I wouldn't even say competing. I would just say traditional lending protocols, right? You get a loan for 0.25% versus 2 to 3% by utilizing something like Synthetix loans.
Yeah, I mean that's attractive right there.
Yeah,
Every percent matters, especially in this market.
Oh, 100%. Hey, in the bear, it all matters.
Yeah, totally agree. So more kind of big picture question, and feel free to some people want to tread carefully around this a little bit, but with the things that are happening as far as government regulation, so the DeFi ecosystem and at the investor level, I'm not seeing a real acceptance of the inevitable, right? There's this feeling that everyone in DeFi is kind of just like, oh, the SEC is gonna, take care of us and it's all going to be okay. But they're out there telling us what they're going to do and how they're going to classify stuff and the regulations that they want to put in place. So, what conversations are you guys having in this regard, and what's your focus there?
Yeah, I think the Synthetix community has definitely had, conversations as to things, and I really think the big core thing that I would say is that decentralization of the protocol is always super important for these items, right? And that's something that Synthetix is at the forefront of. There's not really, anything that anyone can do to control what regulations happen and what regulations don't, and so on and so forth. But at the end of the day, you decentralize the protocol, and I'm talking like true decentralization, not just decentralization, but you vote with your wallet that controls 70% of the voting supply. Like that's not decentralization. That's just decentralization theater, right? So Synthetix is at a good path. I would say it's at a good point in decentralization, and it has set a good path to go further. And those are the things that DeFi protocols, are going to have to do in times like this. Yeah, I would say that's really it. I think it's important that these community proposals and governance actually matters. Because if you're just going to governance and saying, yeah, hey, this is what the core contributors developed, approve it, right? That's also not real governance and real decentralization. Governance isn't a rubber stamp. Governance is, a true and empowered part of the process where they can say, yeah, I don't like X, Y, and Z, change that. And then you have to go back to the drawing board, I think one of the most interesting paths that decentralization has taken at Synthetix is even the introduction of new products, right? Atomic swaps was not a product that was thought up by any core contributor. It was thought up by, I think the initial people behind the proposal were like Andre, Andre from Urine and other parts of DeFi, as you guys are aware, and a couple others. But it was all community members that had thought up, using Synthetix to tie into one engine curve, right? And that's the path that protocols will want to go down. Really empowering governance and making sure that the centralization of power is kept to a minimum.
Yeah, I think that's a great approach. I've never really felt like being presented with three options. Only a select few people came up with was really actually, decentralization to the. So.
Yeah, I mean, like that's
no options.
But yeah, that's the great thing about about how governance works, right? Like you could present an option to the Spartan Council and be like, no, And then that's it. Like your proposal's dead in the water. Like you have to go back to the drawing board and consult them on what changes they want to see, what changes they don't want to see, so on and so forth. So and a real test of decentralization is if that happens to the founder. You know, if the founder can't push his own proposals through governance with ease, that's in my mind true decentralization.
And I think that's truly passing the Howey test too, actually.
Yeah, no, there's definitely a lot to be said about a lot to be said about protocols that take governance seriously and those that don't. And I can't wait to see a point in the future where protocols could tie into Synthetix's governance module and potentially utilize that to further themselves in their path of decentralization.
Yeah, especially as they see its effect and how it combating some of the regulations in a way. People are going to steer towards that instead of, like the Genic brought up, argument for the Howey test, but in reality, most things don't pass that, and it's actually meant.
So, moving on to the final question here. What is the message that you want to put out to the community, right? What is something that you wish you had known when you came in that would have made your life easier, or a lesson that you learned along the way that you would like to put out to the community to help them, either for people who have been in DeFi for quite a while, or even just for the people who are coming into DeFi now? What's something that you would like them to know that will help them be successful as they move forward?
Yeah, no, that's definitely a great question. When it comes to DeFi, I mean, totally could have stepped away from talking about Synthetix and so on for a second. I think one of the core things that people have to, think about is getting involved in DeFi is really as simple as making a Twitter account, getting on Discord, and chatting with like-minded people, right? Finding a project that you really like and contributing to it in the ways that you find beneficial, and at some point opportunities will present themselves, right? That's the biggest thing that I always like to stress to people about DeFi. DeFi doesn't follow this like traditional model where you have to work in a space for a certain amount of years to be qualified to to do certain sorts of aspects of it. If you are good at Solidity, if you could develop, I mean, if you're good at front end development, so on and so forth, there will be roles for you, right? Just some cool little protocols that I know of. If are a Web 2 dev and you want to transition to Web 3, I know there's the Ether.dao. A great protocol that was actually started by one of the engineers at Synthetix. Pretty much what they do is they help Web 2 developers transition into Web 3 through a mentorship model. So your mentorship would be with a protocol like Synthetix. It could be with various Synthetix ecosystem projects, and I know Synthetix has hired a couple devs through this pipeline, right? And during this mentorship, you're also paid for the work that you're doing, right? So you're not just stepping away from your great Web 2 dev job to start working in Web 3 without payment, right? I mean, that's not sustainable. So I would highly recommend checking out something like Ether.dao for those that are interested, and really just just start contributing in the ways that you can, right? Like, don't look at DeFi as just a way to make money for yourself. Look at DeFi as a true way to change the world that finance is handled as of right now. And then work from there and see what projects you enjoy, and chat with folks, and so on and so forth. Try to be a part of governance, try to be a part of community contributions, and so on and so forth.
Yeah, I think that's great. I think that's a message I had been told when I first got into DeFi, because I came in and everyone's like, we're going to get rich, we're going to hit these moon shots. And then, that doesn't happen all the time. Certainly didn't happen for me that often. So I appreciate that a lot. A great message to put out to the community.
Yeah, definitely. I mean, I would totally recommend, checking out the Synthetix ecosystem, not even from a point of like, oh yeah, like you guys should, you guys should all use it and so on and so forth. I just think looking at it from like how they handle community contributions and how that's rewarded. I know of countless people across the Synthetix ecosystem that were all hired in a similar fashion to myself, or maybe they were completing tickets to fix different Solidity items or different Dune dashboards and so on and so forth, and now they're working for the protocol full time, doing what they love. So I'd highly recommend that you guys check that out for even like just that side of things.
Yeah, there's so many doors that open just from getting involved in different communities.
100%.
So
100%.
all right, well, I think that is about it for our questions, unless anybody has anything that they want to ask Matt while we've got him. And if not,
Matt, if you'd like to say anything in closing, feel free.
yeah, absolutely.
Yeah, no, I mean, probably the only thing on the closing side is just, thank you folks for having me. Feel free to keep in touch, give me an ad. I'm not always the best with accepting the ads for friend requests, so I would tag me in this AMA questions channel that you added me, only because I'll get a lot of scammers and so on. So I'm just used to declining the people that add me without saying a word. So yeah, add me. Always happy to chat about DeFi and ways people to get involved and so on and so forth. So yeah, thank you guys for having me. It was a great chat. You guys are two great moderators, I guess you can call yourselves. Had a great time chatting with you folks.
Yeah, thanks, Matt. I really appreciate that.
Yeah, thanks so much. And likewise, this was just fascinating. And I'm really excited for our community, that pays a lot of attention to tomb forks that are, of course, doing a very different kind of synthetic asset, to see where this, we're thinking about this stuff takes us.
Yeah, definitely. There's definitely, a lot of things in the future. I always like to say that, even in the Synthetix ecosystem, some of the biggest projects or some of the biggest protocols that, were highly anticipated for aren't even a thought yet. These are things that on the cutting edge of technology that will just continue to be built as time goes on. So I'm really excited to see where, people's imaginations take us.
Yeah, 100%. All right, well, thanks again. I'll go ahead and give our little outro blurb and wrap this up.
All right. Thank you, guys. I appreciate it.
Thanks again, Matt.
All right, everyone. This has been amazing, and I just want to say thank you so much to Matt from the Synthetix team for taking time to speak with us and let us learn from him today. We're very grateful to have had this opportunity, and we're excited to see the progression of everything they're doing over there with the Synthetix team. We'll be uploading the audio from this to YouTube if anybody wants to hear it again, or if you're hearing it on YouTube right now for the first time, please hit the like button and subscribe to the channel. We got a lot more coming for you guys, and we're very excited to take this journey with you. Once again, I'm Relentless, here with my partners Defi and Julian, and we are the DeFi Raiders. Please check out the links or drop by the Synthetix server to learn more, and we'll see you next time.